Listen, if you're even thinking about purchasing a home in today's market, I need you guys to listen up, because in this video, what I'm gonna do is go over the 5 money mistakes that you should avoid when purchasing a home. Hey, what's going on, guys? My name is Pablo Flores. I'm a Connecticut real estate agent, and today I wanted to go over some of the most common money mistakes that I see people make. There's actually 5 of them. Now, the first money mistake that I see a lot of people make is assume that you need to put 20% down. It's simply not the case. You can actually put as little as 3% down. Now, is there a benefit to putting 20, 30, 40%? Yes, absolutely. Now, depending on the lender product, this can be interest rates can be lower, your monthly rate can be lower, of course, depending on your term. And then the other thing is also you're just gonna be a much more attractive buyer, right? And given how competitive the market is right now, that's always a good thing. Now, of course, that's why you should consider maybe putting the 20% or not even 20, but more than 3%. However, just note that the minimum requirement is 3%. Now, the second mistake is gonna be opening or closing credit cards. Whenever you open up or apply for a new credit card, that's considered a hard inquiry. Now, what that does is it actually lowers or it makes your credit score dip for a little bit. You're also gonna see a credit score drop just due to that new credit FICO category, which accounts for 10% of your credit score. Then again, if you don't pay your credit cards, that's also gonna carry a new balance. So if you open up a new credit card and then you don't pay your bill, or you do pay your bill, however, it carries over to the next month, you don't pay it off, your credit score is going to go down as well. Now, you're probably like, okay, cool, I get it. Can't open up a new credit card. But why can't I close my 15-year-old Bank of America card? Well, the reason that you can't, or you shouldn't, you can do that if you wanted to, but you shouldn't close your Bank of America card is just due to the debt to income ratio and available credit, right? So if you can help it, I wouldn't cancel anything and I wouldn't open anything. Now, mistake number 3 actually goes hand in hand with number 2, so I kind of cheated here a little bit, but it's different, I promise. It's taking out a loan. So I know you wanted to flex on people with the new whip. However, that's gonna have to wait after the purchase of your home, okay? I'm not talking about as soon as you get approved, go to pull up to the dealership and buy a car. No, that's not what I'm saying. You have to wait because closing hasn't happened yet, right? What you're gonna wanna do is if you're thinking about purchasing a new Tacoma, you're gonna have to wait a little bit, okay? You can't just do it now. Now, this is a super common thing, right? You probably hear it all the time. When you buy a house, you don't buy a car. When you buy a car, you don't buy a car, you buy a house. But the thing is that goes for any type of loan, right? That includes taking out a personal loan, taking out a business loan. You're gonna wanna try to avoid those as much as possible when you're purchasing a home. Of course, after the fact, you can do whatever you want. And if you're not planning on buying a home in a little bit, of course, buy your car now. Totally makes sense. But essentially getting another loan just makes you seem as a riskier buyer, just again, due to that debt to income ratio. Now, another mistake is not saving up for closing costs. It's actually super common. And I know you're probably thinking, okay, Pablo, well, if a house costs $200,000, I expect to be spending $200,000. And sure, that would be great. However, that's not the case. For the home buying process, you really just have to save up not only for the home, for the down payment, for everything, all that good stuff. You also have to save up for the closing and other fees associated. Now, this varies from state to state, of course, but here in Connecticut, at least, you have to understand that there is closing costs associated with transferring legal ownership from one person to the next. Now, this includes attorney fees, escrow fees, originating loan fees. This includes property taxes, insurance, all that stuff, condo fees, all that stuff. You have to understand that there might be another fee associated. Now, depending on the type of property you're buying, where you're buying it, who you're buying it from, all this stuff obviously is going to depend on your closing costs. That's where you would ask somebody like your agent or your attorney about the fees associated with stuff. And then sometimes even your home inspection and your appraisal, you have to understand sometimes that's wrapped up in the closing fees as well. Now, a rule of thumb is understanding that it's anywhere from 2 to 5% is going to be closing fees. So keep that in mind when you're purchasing a home. Of course, you have the down payment of the home that you have to save up, but rule of thumb, 2 to 5% of the home that you're trying to purchase is what you should also have in the bank saved up. Number 5, and this one is crazy because it's understandable. You have to understand that if you get approved for a loan for $500,000, you probably should not be looking for a home that costs exactly $500,000. Now, of course, this depends on your situation. I'm not speaking for everyone. You could have just applied for a loan for much less than you actually can afford, or you just got it like that. Now, you're probably thinking, Pablo, if I'm qualified, why shouldn't I buy it? Now, if you buy a home that you really can't afford, it's gonna put you in a situation where you're spreading yourself too thin, your monthly budget too thin, because you're trying to make your mortgage payment. That's gonna put you in a situation that we like to call house poor. Now, house poor, the way that I like to describe it is you have the beautiful home, it's awesome, I love this home. However, you're broke, you can't afford anything else. What I mean by that is that Tacoma we talked about last time, or 2 mistakes ago, yeah, you can't afford it. And that's gonna make you experience buyer's remorse, and you do not want to be feeling buyer's remorse, guys. Now, this is not something super complicated, but for the people in the back that still don't get it, right? Which I think most of you probably do, if not everyone, but I like to hit you guys with examples. This is like walking into a store, right? And you pick out that really nice pair of shoes. And you're like, holy crap, this is the best pair of shoes I've ever seen in my whole entire life. But then you look at your bank account and you're like, dang, I really cannot afford these Jordan 1s. There's no way. But you do it anyway. And now you're stuck in a situation where you're experiencing that buyer's remorse, but you can't return them because you already creased them, right? Now you can't pay your light bill. And all of a sudden, you're wearing your Jordans in your living room with no lights on. Now, at this point, you're probably experiencing buyer's remorse because you cannot pay your light bill, but you have Jordans on, so you're looking fresh in the dark, right? Now, that's a ridiculous example, but you guys get the point. That's pretty much what I mean. Now, of course, your lender should be helping you with the whole process of purchasing your home. However, no one knows your situation more than you do. You should understand how much you should and can actually afford, keeping in mind all the expenses and all the things that you want to do in the future, while being able to actually enjoy the house that you live in. Now, these are just 5 money mistakes, and there is literally a bajillion mistakes that you can make throughout the whole buying and selling process, of course. However, I just wanted to cover these 5 because I see these are some of the most common mistakes that you can make. Now, I don't want you guys to get discouraged because the truth is that whenever you're purchasing a home, you should have a qualified lender, you should have a qualified agent, a qualified attorney, qualified people working with you throughout the whole process. So your home buying experience could be as carefree as just signing a couple of papers here and there and then house hunting like an HGTV, or it could be as stressful as a divorce. Now, of course, this depends on the people that you're working with, but it also depends on your knowledge, of course, right? And hopefully this video helped bump up that knowledge bar just a little bit more. Now, if you're not even thinking about purchasing a home today, tomorrow, next year, the year after that, it's totally fine because honestly, these mistakes apply and they're going to apply forever, okay? Now, if you guys have any questions at all whatsoever, whether it's real estate investing, purchasing, selling, a career in real estate, anything, make sure to either comment down below or you can always just contact me. I have my email down below, have my phone number down below if you guys want to text or call me, and then I'll try to get back to you as soon as I can. Thank you guys so much for watching this video. I'll see you guys next time. Peace.